Welcome back to In Your Money. This evening we're discussing investments. My guests, Henry Biddlecombe and Nadir Tokan. If you'd like to email, you can still me queries to info@anchorcapital.co.za. I stopped you midterm. I mean, it's been quite amazing, and you were just getting into it, how our bonds in the last few weeks have improved enormously.
They have, and it just shows how economically sensitive assets can behave on the back of sentiment. To your point, Bryan. So we've seen sort of a 20, or rather even closer to a 40 to 50 basis point rally in those bond yields, mean that those bond yields have come down. The cost of our debt has been coming down, and on the back of investors locally and globally, to your point, getting more excited about the economic outlook for South Africa and the trajectory of higher economic growth, and ultimately a requirement for less bonds, and ultimately South Africa being in a better position to service that debt. So if you look at our yields on the 10-year bond, Bryan, well above 12% by the time we had gone to the polls. And that's coming off a base where our 10-year bond yields were under 9% in 2015, 2016. So they'd gone up significantly over that period of time. And obviously, on the back of the news that we saw in the election, those have kind of started retracing back to and even slightly below the 12% level on the 10-year bond, meaning that investors are getting more excited about the economic prospects for South Africa. It is, quite a fairly big knee-jerk reaction, to the election result. Obviously, there's a lot to still do in terms of government policy and implementing, policy and kickstarting growth in the economy. But at long last, an asset class, that kind of seeing yields gradually moving higher, starting to see them move lower in a big way. And as your viewers may know, Bryan, obviously bonds benefit off of those yields coming lower. As the yields come lower, the price goes up. And you do quite well out of bonds. So, for kind of the last 7 years, bonds have been a good place to get a decent income out of the asset class, because at a 12% yield, you're kind of getting above inflation yield coupons that you clip from those bonds every year. But from a capital perspective, they've been fairly disappointing. Now, on a forward-looking basis, again, if we can kickstart growth in South Africa, if we can, sort of use this positivity as a platform to catapult from here, you could both get the income and the yield component, which is still fairly attractive at in and around maybe slightly below 12%, but actually start to see some capital gains as well. And there's some interesting analysis that has been done on what would happen from a total return perspective should bond yields come lower. And over a 12-month view, if bond yields come 1% lower and clipping the coupon, you're looking at close on 15-16% returns from an asset class, which could be quite compelling.
Henry, so let's move off bonds a moment, but now let me put a question to you. Clients ask you, should I be moving money offshore? I mean, we've now got the rand close to 18. Everyone was panicking at 19, 1920, down to the 1850s. Now it looks like we're going to break 18 because we did break it last week. What's your view about taking money offshore?
Yeah, Bryan, so I think over the past kind of 3 shows that we've done together, I've cautioned viewers not to take money offshore at these levels. When we model the rand on a purchasing power parity basis going back 20 or 30 years, I mean, we can quite easily come to a fair value for the rand against the dollar of 15 Rand 50 or 16 Rand. And I think that's certainly a very plausible scenario 6 or 12 months out. So I wouldn't be rushing out the door now, especially now that the news is starting to become incrementally more positive. It'll be very sensitive to things like what cabinet looks like and what the interaction between the constituent parties of the GNU is like over the next few months. So expect some noise, but directionally, I think we're looking at a stronger rand 6 months out. So, perhaps set some key levels for yourself. So maybe below 18, 17 Rand 50, 17, and take it out gradually. But I'm expecting a stronger rand.
Well, let's get on to our emails. Nadir, I'm going to give you the first one from June in Witbanks. She says, the concept of buy low and can I just get and sell high, how does this apply to successful investing, and what are some common mistakes that investors make?
Sure, yeah. So, I mean,
that's a program on its own.
Yeah, that's a program on its own.
Yeah.
I think in a nutshell, it's vitally important to investing. Buy low and sell high. You obviously...
We all like to do that, but no one rings bells.
No one.
Now's the time to get in.
100%.
Now's the time to get out.
Nobody rings bells at the top and the bottom, and I think that's exactly some of the mistakes that investors make. And oftentimes, because people are not ringing bells, the news is very bad at the bottom. And often what investors do is invariably capitulate at exactly the wrong time, and inevitably end up crystallizing losses by selling at the lows because the news is so bad, and not enjoying a significant enough of that upswing. And similarly, on the converse, the news is so good right at the top that it almost becomes human. You got to fight against human nature and go against everything that you're hearing, cut out all the noise, and possibly take some profits right at the top. So I think it's really the lesson for investors is really to kind of remain fairly unemotional about it. Stick to your financial plan. Have a good financial advisor, first of all. Stick to your financial plan and ensure that you're holding the right assets for the right reasons to meet that particular financial plan of yours.
Henry, Lionel in Heidelberg says, does it make sense to hedge the gains I've made on the Magnificent Seven?
Well, I mean, we're talking about buying low and selling high.
Yeah, well,
this is a great example. We've been talking about the S&P 500's valuations trading at near record highs at 22.5 times forward earnings. The market's been carried up by those specific stocks, the Magnificent Seven, and this year it's almost like the Magnificent One with NVIDIA. I think this is a great time to be taking profits, and in fact we have been taking profits. Volatility is relatively low as well. The VIX is at 12 or kind of 13. It makes options quite cheap, so you can buy put options in mandates that allow for it fairly cost effectively. So I think these are all the right questions to be asking at this point in time. I certainly wouldn't be throwing money at those shares now.
Henry, can an individual investor take that, buy options to take some advantage?
Yeah,
and
they
hedge?
can. I mean, in a retail brokerage account, you can go and buy options. So if you're comfortable with how they work, you certainly can. And if you feel that you can't, there are a number of hedge funds that are available to retail investors which can do that. So maybe swap some of your long exposure for hedge fund exposure.
Nadir, Samuel in Johannesburg asks, some of the rating agencies have left our ratings intact. Is it likely that after the good election, a rating could improve? And what impact will this have on foreign investment coming back into South Africa?
Yeah, well, I mean, I'll start with what impact it will have. It would have a tremendous impact on the South African economy. Financial outflows into the South African market have been almost one-directional for the better part of a decade, and that's been in the wrong direction, unfortunately. With kind of financial outflows from the South African economy. But apart from financial outflows, Bryan, there's been very little foreign direct investments into the economy. Should the ratings outlook improve? Should we manage to kickstart economic growth? Should we manage to solve some of the fundamental bottlenecks to economic growth in South Africa? We seem to be making significant headway with the electricity shortages. Should we manage to do the same with the port and the rail issues, and a number of other kind of supply side constraints to the economy? And should, on the back of that, we manage to bootstrap some growth and manage to get a positive ratings outlook going? Well, then, I guess we start to see some significant foreign direct investments into the economy. We'll start to see some significant financial inflows into the economy. The reality of that on the ground for the average South African, Bryan, is that hopefully a stronger rand, hopefully inflation that is more contained, and hopefully interest rates that can come lower. And, we know that when interest rates come lower, that's kind of a boost for the consumer. And, it kind of has this positive reinforcing cycle of then kind of improving growth further. So there certainly can be a very positive story to tell if we can get some of these short-term economic bottlenecks sorted. And, the ratings agencies can certainly play a vital role in terms of bringing that onto the radar of the global investment community and ultimately seeing those inflows and that foreign direct investment into the local economy.
Henry, let me piggyback on that one. Let's talk about greylisting. Henry, Nadir spoke a bit much about the rating agencies, but let's talk about greylisting. Where are we? Are we any chance of us getting out of this?
Yeah, so I think we're making progress. We maybe won't address it as quickly as a region like Mauritius did. But, you know, again, I don't think that that's really the overriding factor. When it came through at the time, it was incrementally quite negative. But right now, I think, you know, when you're looking at risk assets like South African equities or government bonds, it's going to take most of the direction is going to be determined by what happens with government and with cabinet, and then after that, probably with rates globally.
Henry, last one, because we're coming to the end of our program, and the question is from Nigel in Midrand. He said, when is the national budget described as being in surplus?
Yeah, so very simply, when tax receipts are lower than expenditure, you know, we're kind of in a structural deficit, and we have been for a number of years. But what I can tell you is that I think the deficit's improved as compared to the beginning of the year, or the outlook at the beginning of the year. You know, the commodity markets helped us. There's been a bit more revenue there than expected. VAT receipts have been quite positive. But looking ahead, it's very hard to say until we know what the GNU looks like and who holds which posts and what the resultant policy looks like.
Any comment you'd like to make then?
Yeah, not too much to add, Brian. It's exactly that. It's when your tax revenue coming in exceeds the amount of money that government is.
Okay, so the balance of payments balance of trade deals with imports, exports,
Correct.
and tax collections. When you're in profit surplus, it's really just tax collections.
Yeah, correct.
Well, we've come to the end of our program. I'd just like to share with you, if you were on a plane tonight and you were flying from Los Angeles through to Tokyo, and you looked down at the world, and the world was flat, and as you flew over, you flew across the Americas, then to Britain, then or through Europe, then across to Asia, then to Australia, and all over the places. I have one question to ask. How much would any of those foreign investors invest in South Africa? Nadia?
Sure. It's a tough one. What I will say is that they currently have a very low allocation to South Africa, so it's hard for you to imagine it going lower from this point. And if we manage to address some of their own goals and we manage to address structurally low economic growth, I think one could certainly argue that in 12 months' time, significantly higher than what it currently is.
Well, we've come to the end of our show. I'd very much like to thank Nadia and Henry for joining us this evening. It's important to note that our program is to provide information and should not be construed as advice. Next week's program, we'll be dealing with financial and retirement planning. And if you need to get hold of me, my details will appear on the screen. I'd like to thank you for watching, and good night.